revolution as the internet and connectivity increases. What does this pose? What kind of a challenge, rather, does this pose? And joining me in studio is Joshua Okeo, who is a lecturer at Daystar University School of Business.
Right.
Mwalimu, thanks for talking to us here on KTN News this morning. When we talk of the fourth revolution, what exactly are we talking about?
It is said that we are moving to the fourth industrial revolution. It is revolution because it is a make or break for humanity. The first was mechanization. After we introduced machines to labor, then we went through automation. Then we went through mass production, then automation. So now we are in digital age. And we are looking at seamless connectivity between physical, biological, and digital. And life is going to change and is already altered in very many fundamental ways.
And how is life going to change in this fourth industrial revolution?
The biggest impact is labor. It is said that in the next 20 years, over 50% of labor will be replaced by machines. And by that time, we shall be 9 billion people wanting to feed, wanting to pay bills, wanting to live. And of course, we need money to do that. Yes, so another impact is that wealth is not shared as it used to be. So this technology has enabled wealth to be shared by very few people. It is said that less than 100 people in the world control the wealth of half of the world population.
The gap between the rich and the rest widen. We'll come to that a little bit later. Yes. The World Economic Forum, if I can quote you some of the things they said, they say, and I quote, in its scale, scope, and complexity, the transformation will be unlike anything mankind has experienced before. I wonder how different this particular fourth industrial revolution is to the earlier revolutions that we had.
Well, when introduced, we abandoned labor to machines, we were able to grow. And once we were able to grow, and for the first time, families were affected. And men had to leave home, go work, and we did many hours. Initially, people used to work up to 100 hours a week, especially in the US and the sweatshops here in the Europe. So what happened this time, people really complained. And that's what made International Labor Day to be made, it's called the May Day. It was a big strike, and people agreed that it is now going to be around 40 hours a week, which is 8 hours per day times 5 days. After that, now this 40 hours is even becoming more hours in terms of jobs are becoming short, very erratic, and very less paying.
Does this lead to the rising gap of inequality?
Absolutely, because if you are not going to share the profits that the businesses make through salaries and remuneration, and the machines cannot be paid salaries, so it means the investors, which we call the entrepreneurs and capitalists, are going to make all the money. And that is causing a lot of social tensions that we see across the world. Actually, it is the fight over resources. Even if you look at political dispensation, is access and control of resources. That is what is making all this hype about
It's good that you mentioned of entrepreneurs, because one thing that often the fourth industrial revolution is accused of as well is killing the human identity. Are we, by the edge and the tick of the clock, becoming heartless human beings? Indeed,
well, we are trying to behave like our machines. And in fact, they are saying that the attention span, the average interruption at work, using your phone, checking this, is 221 times. And attention has reduced to 5%, less than 5% in terms of concentration. And we are becoming less antisocial. And what is being said that we are spoiling what they used to call social capital, that emotional quotient that makes you relate well with others and invest in others' well-being, that also cautions you against...
And it is technology that is doing this?
Yes, because we are more detached from each other, unlike those days, like they say during the hunting and gathering, the caveman only worked for food. And if he got food in 1 hour, the rest of the time is spent with his family. And that is not happening. We are using technology to reach out, to take care of the human attributes that we use normally to interact with each other.
Mwalimu, which paints the question, rather the portrait, which is in sometimes conflicting. If technology is connecting people, at the same time, as you say from our own statements, we are being far from one another. Is that not an irony on its own?
There's a contradiction. They say the more social we say, we call it social media, the more antisocial we become. I'll give you a case. You get two women fighting, and then there's a young child trying to separate them because one of the women happened to be the mother to the child. I guess the first thing you do is to take a photo and post it before you can even think, not even do anything about it. So that feeling, that connectivity, that the social attribute of taking care of each other is going down at a very faster rate. So if you look at young people's social skills, skills of dating, skills of connecting in people in special ways, we don't have tolerance for that because we are more relying on our machines to give us that attribute that we can think to get from fellow human beings.
We will come to the aspect of digital economy, but one last question on this. The more we become connected,
yes,
we become more socially unconnected. But what kind of a society then does this technology prepare us to?
We will be a society that behave like machines. We used to say, give me a worker that a German, an employee that works like a German. Now they talk about a machine that works like a German. Yani, we are going to be more detached, and that means it has so much impact on social skills and relationship. We are more or less having an open society where you can relate to anybody, any place, enabled by technology. And this is even affecting relationships because you cannot sandwich anybody. People relate anyhow, anywhere. And all these are killing those kind of so connected relationships like dating, intimacy, and even marriage, for example.
How is the connectivity, the devices that are connected to the network as well, going to change in the fourth industrial revolution?
It is said we'll have 40 billion gadgets connected, all the way from hospitality, transportation, healthcare, infrastructure. All this will be interconnected. So 40 billion items with an economy worth $14.4 trillion. That is where we are going to be. So the biggest impact and casualty for this, as we have said, is the human labor. Yes, we are not going to share wealth due from employment the way we used to. Yes, and society is going to be more intolerant to each other because the reason why we exist is about resources, and few people are going to control these resources, and it has made even billionaires in a short span of time.
More than the individual economy, what kind of a picture will the fourth industrial revolution have at a global economy or regional economy or even a country's economy?
We are looking for new innovations, faster business processes. In fact, the biggest alteration is the business process innovation. That aided by technology, companies are able to deliver superior value in a record short time. And this is also jump-starting various economies and moving so fast in areas that are so fundamental to the operations. For example, look at the banking sector. Look at the financial sector. We have new products, and the new talk in finance sector is financial inclusion. That means to bring everybody on board, and financial deepening means have many products that are digitally enabled so that economy can move faster. And around $30 trillion was sent in 1 year alone, up to this last year, 2017, using mobile digital platform. That means the movement of money is becoming easy. We're able to pay our suppliers faster. We're able to deliver goods faster. We're able to get information in more targeted way, more packaged way. We just do what we call data mining. We look for what you want, and soon or later you're able to click a deal, things which used to take much time.
It seems to me as though those who will survive in this revolution should have to be connected to the internet more so.
Yes. What is going to happen is that for you to survive, you have to be roped in one way or the other, because it looks like all the business processes will have to be entrenched in this technology. And therefore, we need more accessibility, we need more awareness, we need more being able to use them. So there are factors which are fundamental to inclusion, especially in the financial sector, like simplicity, affordability, things like reliability, things like acceptance. If all these factors are not correct, then people would not embrace any digital solution to a business process.
Mwalimu, if we will be a little bit futuristic, in this fourth industrial revolution, will there be a need to have an office somewhere, report there from 8 to 5?
Labor and delivery of your employment service has been already impacted and altered in many fundamental ways. We do not need brick and mortar to do business. We expect to see more briefcase companies because if you are digitally enabled, then you'll be borderless. Even banks are talking of branchless customers, and that is already happening. And they say even the supermarkets of the future, you will not need to put things in one big house and ask people to pass by to buy them. People will be buying like fueling along petrol station. Just click what you want. At the end of it, you swipe your card, you drive away. And those are that will fundamentally cut a lot of cost for retail business because retail is very delicate as a business. It depends on so many fundamentals that can alter it in very many ways.
And in these digitally connected businesses, now that you don't know whom you're dealing with, doesn't that raise the question of trust on the other edge?
Yes, there are two concerns. One is most people are faceless. You don't see the other party. But if you've ordered things from China and the East, you've seen that you get them in the way you had even instructed the supplier. So we'll need more trust. And the other issue is that there is the regulation issue. Look at the digital finance like Bitcoins. And you don't know the guys. It's faceless and there is no regulation. It is borderless. So we will rely on the control features of the same digital platform would enable that each party to a contract, either a sale of good or whatever it is, delivers.
And how genuine can you know that the person whom you are dealing with is the person who should bring you the goods and services?
Well, it depends on the features of the system. It will be in such a way that you have to prove that you have the commodity, for example, in a sale of good. You have to prove that you are able to deliver. There has to be systems to ensure that you put it within this delivery process before a payment is sent to you. And already this is working. For example, M-Shwari, you are the bank manager, you are the approving officer, you are the transferring officer, you are the spending officer, and you're the one who will ensure compliance that you pay it back.
It's good that you mentioned all these officers because that is often a concern. That the digital economy, the digital way of doing business as well is killing the human resource sector within that.
Yes, that is true, but if I can tell you for sure, the entrepreneurs are thinking of investing in more machines than human labor. One, they will work all the time. They have no features of emotions that we do. They don't have costs like insurance, medical, and healthcare. They are 100% reliability if the technology is proven, and that means their return on capital will be faster for them than human labor. The only challenge is that we are going to run what we call unsustainable society.
In what way?
Well, they say that every night the poor are awake because they are hungry. But the same night the rich is awake because the poor are awake. So either way, it's not going to benefit the rich alone. If you have to live among us, you have to ensure that there are minimum guarantees. And that's why the government is talking about the big four. If you look at the big four, and then you check the UN Sustainable Millennium Goals, you find they are picked from there, that if you give a population a minimum guarantee, affordable health care, affordable, decent housing, decent means of livelihood, they're even talking of universal basic income, then he can pay the standard bills. But if you want to get more or become an entrepreneur and be rich, there are opportunities for growth. If you run a society like that, then that model is believed to be more sustainable. Yes.
If you have the poor, as you say, who are awake because they're hungry, the rich who are awake because the poor as well are awake, the rich getting richer, the poor getting poorer. Well, what kind of then an economy or even a society does this become?
It will not it will be dysfunctional in many ways. You can even see what happens to our politics when stakes are very high. It's about resources. So the new thinking in academia is shared value. Okay, we move from corporate social responsibility, like the rich man's table, whatever falls down. If you remember the people Lazarus, you give to the poor. That is not working. They move to a model of social enterprise. A social enterprise is whereby you are fixing a fundamental problem in society at the same time making money, like lighting rural schools and enabling children to go to school at low cost, and you give them lamps to hire, to go back, read and hire these lamps, go with them home, light their home, pass the exams, pay. So, and if this poor child goes to school, then he gets an opportunity, he can be rich. A social enterprise like M-Copper, those things are transforming lives. But they're saying even social enterprise is not enough. So the current thinking is shared value, that companies should be able to share their profit as they make it. The challenge is, how are you going to share it if you don't need human labor? So these are contradictions that leadership of capitalists and the entrepreneurs are trying to deal with.
And the sharing also seems as though there is the question of individual morality, is it?
Yeah, the shared value, they say, also kills what we call the individual effort. Because if your own entrepreneurial skills and ingenuity will not guarantee you a difference between you and your neighbor, then you lack the will to work that hard and make that money. Especially things like punitive taxation affects entrepreneurship because you feel you're going to work for the government. So it's a counterproductive that we are going to share, and the people should share. But they are saying now the state should come in. And that state should make sure there are systems and checks and balances that give minimum guarantees to caution the deprived in the society. And that's what I think the government is also trying to do.
We'll come to the role of policymakers and more so even the taxman a little bit later. But what are some of the things that will headline this fourth industrial revolution?
The greatest features is that reduced social skills, reduced human contact, will our emotions and the way we do our stuff, we have a faster society. Like the current generation are very fast oriented. They don't want to be delayed. Remember, they are born in the era of instant economy, a microwave, SMS, ATM, things are happening for Google very fast. So we have life moving so fast, and this is causing a lot of distress among
and does this
people who can't cope.
And does this tailor human being to one line of thought?
Yes, that I don't know in which way, but of course we move as a society, so we may move in one direction, but we are becoming more intolerant to our own fellow human beings. And as I told you, we are more identifying with our machines than we identify with people. For example, if you left your phone home, is your day spoiled? Yeah?
Yes.
But if you didn't say bye to your daughter or kiss her on the cheeks, you say you can do that later. And so you find we already altered in some fundamental ways by relying on technology.
With the increase of technology in business,
yes,
the question of the taxman often comes up. What is the role of the taxman in a digitized business?
There is a growth opportunity for the taxman, and it's also a problem for the taxman. If you're not going to have people not working enough, then the taxman revenue will go down. Remember, there are three categories of people with regard to taxes. We have the rich. The rich don't pay enough tax because they declare what they have made after they have traded, and they declare anything. They can even declare they didn't make money, and they also work with policymakers. They sponsor politicians, so they are likely to control even the regulation process. The poor are on nobody's network. They are under the radar. And they might be, not the poor, the people who are not on the formal system, because some of them are doing very well, even entrepreneurially, but they are not on record. So the taxman cannot rope them in. And one of the ways the taxman is trying to do so is to tax data, because at least this guy will be on Facebook. He'll be on Instagram, he will have a bank account, and some data about him will move within the system. And you've heard even in places like Uganda, they are taxing social media, because that's where everybody should be. Now, the people who support the economy are the middle class.
let me interject you on that point.
taxman.
In the event that you don't know where the offices of these big corporate digital businesses are, how is the taxman going to tax them?
Well, data, because even if they have no physical presence, they will be moving tons and tons of data. And what the new thing about this technology innovation is data mining. If I can look at your data traffic for 1 year, aided by artificial intelligence, I can know what kind of business you are involved and what kind of money you pass around. And I think that's what even the taxman is trying to do. Even if you look at the issue of security, the criminal justice, criminals are able to be apprehended very, very fast. The reason is because they have data moving. They might have called somebody, SMS'd somebody. So if this data is captured within the system, and then you are able, it doesn't matter if you are faceless. We can profile what you are by the things, the data that is available outside there. So this is helping. Also, it brings the issue of breach of privacy, which is also another whole ball game altogether. Yeah.
In the event that the taxman is using data, and the data that has been mined is not accurate, is there a problem there?
There's a big problem, but remember, for the taxman, the fact that he means to make money about it, whether the integrity of the data and all that, mostly the taxman will be concerned about the financial data, and the financial data mostly is accurate. The only problem with financial data is the reason why it is transacted. If I receive a funeral donation from you of 100,000, and the taxman has no way of knowing it was a donation, the taxman will think I've earned 100,000 and
they
will
need
demand
to tax.
its tax.
It's good that you also talked of money, because there's often the push of going with a cashless society. Let's go the e-money. What kind of an impact will that have as we conclude the conversation?
The e-money will help turnaround for payment will be faster. And we will not have to shuttle notes and coins around. So that will kill also those who do the business of transporting cash. Already they are impacted. The e-money has impacted the banking sector. You can see bank tellers are no longer needed. What are you telling when your phone is telling you everything? You find branchless businesses that are in the financial sector and are really doing well, but they rely on the system. The digital system has to have certain features, which I said. One of them is reliability, affordability, convenience, ability to understand it, and many other things. If those can be proven, then people embrace it. And as Kenyans, we are known
And do you
to
foresee
like
the e-money reducing the cases of corruption that have been rampant in the country?
Well, it might even increase it, because you pay faster and you don't even know whom you're paying. So by the time you intercept the money has already been removed from the account from which you can only go after the trail. But the cash itself might not be very, unless the regulators work with the financial institutions, then that is the only way they can help.
Mwalimu, that's where we'll have to leave. Joshua Okeo, a lecturer at the University, Daystar University School of Business and Economics. I understand we are taking a short commercial break. We will